Have you ever wondered what many people think before committing to a marriage? Can I trust this person to make my life better? That's exactly what a bank is thinking about when you ask for a loan or a line of credit. And if they can't confidently answer yes to that question, they won't commit. See, the relationship between a bank and a business is a lot like a marriage. In the beginning, there's excitement, optimism on the possibilities. But over time, reality shows up. Payments become pressure, interest becomes tension, expectations become heavy. And what once felt like a partnership starts feeling transaction. First comes the silence, then the distance, then the strain. And if nothing changes, then we go into collections, default, and court claims. And that's where the relationship breaks down. You see, the bank thinks the business lied about its strength, and the business thinks the bank never really cared. But most of these problems could have been avoided from the beginning if the business understood what commitment to a bank actually required. So today I want to share the 7 trust signals every business must build before walking into a bank lending relationship. And at the end, I'll give you one professional strategy I use with clients that instantly changes how banks respond to them. Let's begin. Trust signal number 1, cash flow predictability. You see, in a business, predictable cash flows is everything. You don't want a partner who cannot show up consistently, who cannot grow faithfully. And banks don't want to fund a business that has unpredictable cash flows. Though your income statement will show net results, your monthly cash flow trends reveal patterns in your revenues and expenses. And consistency in cash flows builds confidence in expectation. Why? Because revenues indicate consistent service excellence and customer loyalty, while expenses will demonstrate consistent commitment. Strong cash flow predictability, that's attractive for banking relationships. Trust signal number 2, clean financials. Clean financials are honest financial statements, complete and accurate. You see, a lot of businesses, healthy businesses, go to the bank to grow, but many struggling businesses go to the bank because money is tight. They just want to survive. And then temptations come in. You adjust numbers, losses get hidden, weaknesses are disguised just to get the bank's attention. But eventually, the truth always surfaces. And when that does, trust disappears. A bad financial report, remember, is not failure. In fact, honest weaknesses exposed in financials attract better solutions than polished deceptions. Some banks would help rebuild struggling businesses, but almost no bank will knowingly partner with dishonest financial statements. Trust signal number 3, the character of your credit. You see, your credit history is your financial reputation. That's your pattern of behavior over time. And of course, character is built, reputation is built the same way, not by perfection, but by consistency and improvement. Someone improving from a 450 credit score to 620 may actually demonstrate stronger discipline than someone falling from a 780 to 640. Growth matters, patterns matter, character matters. Your credibility increases when you can demonstrate growth. Trust signal number 4, assets. Assets help the bank feel protected. Businesses with equipment, land, buildings, even during hard times, can still look valuable to a lender. And that's because assets serve collateral, and collateral reduces risk. Why? Because assets are harder to fake and harder to disappear overnight. But cash can vanish in 24 hours. So if you build a business with no real foundation in assets, it's like building a marriage on lies, right? As soon as a small wind comes, it gets swept away. Trust factor number 5 is stability. Stability is maturity. It's the ability of your business to function without you, the ability of your business to survive time. So I once worked with a business owner and I helped them discover something disturbing. If they were not at work, if they were not involved in the deliverable, the entire project would collapse. The entire business would collapse. Why? Because they were the system. They handled everything. They were the only ones who knew how to do everything. And to a bank, that's existential risk. In a business, if one person carries all emotions and financial responsibility, that's a lot of operational weight, and that relationship eventually breaks under pressure too. You see, strong systems create stable relationships, and stable relationships survive the test of time. Trust factor number 6 is a clear use of funds. What are you going to use that money for? And are you going to do exactly what you say you're going to do with it. And that's affected by the vision. You see, what exactly will the money accomplish? How will it produce returns? Your vision, it has to be specific. And here's the hard truth. If you don't have clarity in your vision on what you want to do with those funds, don't take the bank's money, especially if you own valuable assets. Because sometimes the collateral interests the bank more than the business itself. So a clear vision informs you and the bank on how compatible you are. Trust factor number 7 is presentation, also known as leadership. You can have a solid business, but poor presentation, it destroys trust. Messy reports, weak communication, ignored emails, sketchy websites, using your home address. These things seem small, but they quietly communicate your leadership style. Instability. Leadership is not just doing the work, it's presenting the work clearly enough for the bank to believe in it. Just like a marriage where people show up with their best and after the wedding, they let themselves go into a sloppy trend. Many businesses do the same thing with their presentation. They focus on faking looking good for the bank. And then after getting the loan, their sloppy nature is exposed and eventually everything goes sour. Let your presentation be a permanent picture of your standards. If your business feels uncertain to you, it feels dangerous to a bank. But when your business demonstrates trust factors, predictability, honesty, character, responsibility, stability, vision, presentation, and leadership, you stop chasing money and banks start wanting to do business with you. Here's my pro tip. And this shocks people every time. If you want to get a bank loan or bank line of credit, walk into the exact bank you want to build a relationship with. Ask to speak with the commercial loan officer. Then ask them one simple question. What does a strong business application look like to you? What do you want to see? They will literally give you the answers to the test. And most people still won't do the work. But the disciplined ones, they position themselves differently. And eventually they become bankable. And whether you want a loan or not, that business is established in such a way that it's happily ever after. It's sustainable. If this message helped you shift your perspective, help prepare you for a bank application, please share it with another business owner and subscribe. Thank you so much for watching, and I look forward to seeing you on the next one. See you at the top.